keeping it simple is one of the best things you can do when it comes to trading in markets. And today I'm going to show you guys a simple setup that I use when it comes to trading the market. Now, it doesn't show up every single day, but when it does show up, I like to take advantage of the setup if everything lines up and if everything's in place. So what is this simple setup? Well, it's basically using trend lines, right? More specifically using trend line breaks. So I'm gonna show you guys examples and show you guys a trade that I took so you guys can understand it much better. Now, you have to understand when it comes to setups in the market, a lot of new traders, and I did this myself, okay, when I first started out, when you get a setup, you think that every time it appears on the chart, you should take it. No, things have to line up first before you take the setup. So you have to understand the direction, you have to have a bias, right? And then you have to have a key level, and then you go from there. So let me show you guys a quick example. So right here, okay, the market's going up. So our bias is to the upside, right? So we're looking for, the market to pull back to a key level, okay? So I'm looking for a key level, and we have a key level right here, okay? So we have to understand that we know what direction the market is going and which key level we need to use, okay? I like to use support and resistance and supply and demand, and the setup is going to be the trend line break. So right here, we have the market pulling back to this key level, and then we're looking for the market to pretty much break this trend line. Now, how many connections do we need? Honestly, you need, minimum 2 connections, but 3, if we had 3 or 4, even better, okay? So we have 1 pivot, 2 pivots, and that's all you need. But if you had 3 pivots, even better, okay? You connect these pivots, and then when the market breaks this to the upside, you can look for continuations. Now, do you want to get in right away? You could. Actually, let me explain that later when I show you guys some examples. So let me show you guys some examples right now. Okay, here is a good example right here. We are at support, right? And the market basically is going up. So we have a demand level right here, okay? Now, when it hit this demand level, what do we have? We have the market building up this trend line right here, okay? So we have 1, 2, 3 connections right here, right? Again, the minimum you need 2, but 3 connections is even better. So we had 3 connections. So we want to basically draw our trend line, okay? And as soon as it breaks that trend line, we want to get in. Now, you can wait for the market to break it, right? And close above the trend line. All depends. All depends on your style. Usually I like to get in right away. Okay, but you can wait for the market to break it and close above the trend line, okay? Where do we want to put our stop loss? Well, I like to put my stop loss below the trend line. So if I'm getting in right here, it's below the trend line, because if it goes below that trend line, then it's not a trend line anymore, right? The market is basically going, and most likely it's going to make lower lows. So you could target the high, or target any level, and we're looking for either a quick scalp 1-to-1 or a quick 1-to-2, right? So that is the whole idea. We're looking for a key level. We are understanding what the market is doing. Right here we have market at support, right? Bounce off support, creating this demand right here, and then we're looking for that trend line break. So let me show you guys some more examples. So right here, guys, the market is pretty much going down, and we have supply right here. Now, the market is going up, okay? And we have a trend line. So again, we're looking for a trend line break, and we have that break right at that supply zone, okay? Remember, it's a key level. So once it breaks this trend line, okay, you can get in, okay? And again, set your targets either at a key level, or you can go for all the way to the lows. This one didn't go all the way to the lows, but overall, if you went to this level right here, okay, you definitely got a decent RR anyway, okay? Close to 2, pretty much a 2-to-1. So let me show you guys a trade that I took, and let me just go over that trade real quick. So right here, guys, this is a stock that I was basically trading. Nowadays, I do trade stocks pretty much this whole year. Off and on, I was trading stocks, or maybe just looking at the stock market, because I wanted to add some more markets to just my trading, okay? So I've definitely been adding stocks, and right here, what we have is the market going down, okay? You see that the market is shooting down. So automatically, I wanted the market to just basically give me that continuation to the downside, right? So right here, if you look at these hours right here, I got in, okay? When the market was rejecting, and pretty much I was looking for that continuation. Now, this is not the trend line break trade. I'm just showing you, the trades that I took that day. And this trade right here, unfortunately, didn't work out. The market was trying to go up, and then, I got out when it went pretty much above this level, and, I got stopped out right here, right? So that was a loss, or that was a loser right there. But the trade was this, okay? The market was downtrending, right? Let me just erase this. The market was downtrending, right? And then we have this supply right here. And then we have this trend line break, okay? So that's where I got back in the market. So notice we see these arrows right here. Pretty much I got back in right here, added some more right here, added some more right here. And then when it started to go down, okay, because I really wanted this low right here, right? I wanted my target to be this low. So when we started to basically bounce up right here, I noticed that we had some resistance right here, so I added some more. And then finally, we got the target right here, okay? But the overall concept was we are at a supply zone, right? We have a trend line break, and I'm looking for that continuation to the downside, right? And unfortunately, the first trade that I took, I was down around 1,200. So this trade pretty much made up for the loss right here. So this day I was only up $929. It could have been a day where I was up maybe $2,000 to $3,000, but unfortunately I had that loser. It is what it is, right? So I'm showing you guys the example of having a key level, having that trend line break right at that key level, but also understanding the context, understanding what type of market it is. Is it a seller's market? Is it a buyer's market? And then you go from there. So let me show you guys some more examples so you guys can really understand this. So right here, guys, the market is going up, right? And right here, I want to be a buyer, right? So we see the market going up, and we have a key level right here. So this key level is pretty much support, right? Now, notice how the market didn't really, it tried to go to the support level right here, but it's honestly, if you look at it, it's only a couple of ticks away. So it's not like, it's far away from the line. It tried to hit this right here, line right here. It tried to hit it again, and then also it tried to hit it again. So 3 times it tried to touch that line, and it's right there. It's not like it's far away. It's close enough. So to me, when I see something like that, especially we have, triple bottoms, if you look at it like a triple bottom, to me, that's good enough, right? We're close enough to this line, and all of a sudden, you see, right, a nice little trend line. So connect your trend line right here, right? And you're looking for that breakout to the upside. Again, you can get in as soon as it breaks that trend line, or you can wait for it to close above that trend line and, go from there, okay? Me, I just get in, when it breaks it, and then I go for my target, boom. So the target would be the high right here, and you'll be done. So let me show you guys another example. Okay, guys, so right here, we have a good example right here. The market right here was selling off, okay? So this would be a key level I'm looking at right here because we have resistance right here. Now, notice how the market came back to that key level, and what do we have? We have trend line. That been, the market been creating this trend line. So as soon as it breaks this trend line, to me, that is a sign to get in. Again, you can put your stop loss wherever you want to, but to me, above the trend line break is a good place to put it, right? And then you can look for your profits, okay? You can look for either the low or, at the demand level or whatever the case is. So let me show you guys another example. All right, another example right here. The market is trending up, okay? So we know that the market is in an uptrend right here. So pretty much we're looking for longs, right? So we see this demand level right here, okay? And I see that we're building this trend line right here, okay? So right here. And then all of a sudden you see the market breaks this trend line. This would probably be one of my targets right here, but it definitely went up way more than that, okay? So this would be another good example of just understanding the direction of the market, understanding, the level that you're looking for, and understanding just basically looking for that trend line break for that, continuation, okay? And let me show you guys one more example so you can really understand this. All right, guys, so overall, the market was basically breaking this key support level, right? It broke it. And now this support level became resistance, okay? So overall, when I'm looking at this, notice how we have this trend line right here, right? And it broke this trend line, okay? Soon as it broke the trend line, definitely an entry right here. You can target these lows right here. But another thing I want to show you guys is, look, it broke the trend line. It created a supply zone right here. So we have supply and resistance lining up, okay? Plus we have a trend line break. So to me, that is a very high quality trade because we have multiple things lining up. So we got resistance, we have supply right here, okay? And then we have that trend line break. So we look for that continuation to the downside. So that is the example of a very simple way to trade the market. Honestly, trading doesn't really have to be a complex thing. It's just understanding the direction of the market, understanding what key level you want to, use, and just using a setup to get in the market. It could be any setup, and just using correct risk management, and that's it, right? A lot of people want to just complicate things, but keeping it very simple is very important when it comes to trading. Okay, now this doesn't show up every single day. Okay, that's why I have multiple setups when I attack the market. But this is definitely one of the simple setups that I like to use when it comes to trading the market. So definitely this is one step that you can use when you're trading the market. Back test it, see if it fits your plan or it fits your strategy, and go from there. So that's all I have for you guys. If you enjoyed this, hit that like button, hit that subscribe button, and comment below because I like to read your guys' comments and answer your guys' questions. And thanks a lot for watching this video. Talk to you guys later and have a great day.